A lot of talk has been going around about the tax benefits of furnished holiday lets. This is mainly because of the new popular B&B, serviced accommodation, and furnished holiday lets. So we hear things like there's tax savings on interest relief, capital gains, rollover relief. Today we're going to talk about these benefits and whether they're right for you. Hello, welcome back to our channel and podcast. My name's Gemma, and here at WS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Ifthi joining us again. For those of you who don't know Ifthi, Ifthi is a trained accountant and mortgage advisor who's been in the industry for over 10 years, and he is also one of the founding directors here at WIS. Welcome back, Ifthi.
Hi Gemma, how are you doing today?
I'm good. I noticed that you look a little bit different today.
Oh yeah?
It looks like you're growing a little moustache there. What's going on?
Oh yeah, of course. Yeah, I mean, it's something that we are doing company-wide, right? So myself, Vijay, Suneth and a few other staff, we are supporting the
Movember.
So it's the Movember, right? So obviously these are to do with men's health issues like prostate cancer and various other issues. There are a few people that we know who have been affected by this. So we want to support the cause. So as a company, we are promoting this year. And at the same time, there will be a collection that we will be doing. So anybody who wants to contribute towards this cause can do. And we as WIS, we will match your contribution. So there is something like that we are doing as well. So if anybody contributes, we will match that contribution. You know, it is a good cause. So if somebody does have some spare cash, feel free. I think we all know somebody who's been affected with cancer, and obviously, 50% of the population is men anyway. So it is a good cause. Every penny
Definitely.
sort of counts, right? So even if you have £5, feel free to sort of donate it. It'll all help.
Yeah. And this is valid for the month of November in
right.
2021, for those of you who are wondering. So I will leave a link below if you'd like to donate. That would be lovely. All right, Ifthi. So today we're talking about furnished holiday lets, aren't we? So let's just maybe do a little brief summary of what a furnished holiday let is for anyone who doesn't understand.
Okay, so furnished holiday let is your summer house sort of thing, right? Where you buy a house, go and stay a few days, and for the rest of the year, you sort of let it out. So these are normally in popular destinations like close to a beach or maybe close to some historic site like a castle or somewhere there's a nice view or somewhere where people can go for nice walks and things like that. This is what it is, right? So with that, obviously there are various benefits, and obviously with all these things, there are disbenefits as well, right? So we are sort of looking at that area. Obviously, I work as a mortgage advisor as well. There is a growing number of interest from our clients in this area. Certainly over the last couple of years, we've had a lot of inquiries. So it is a growing area. So there are tax benefits as well. A lot of people talk to me about this. So that's why we thought it might be a good topic to talk about.
Yeah, definitely. I feel like we get a lot of questions about the difference between holiday lets and buy-to-lets. So maybe we could just talk about the difference so that we could clarify that for people.
Yeah, this is quite technical. So, obviously I'll tell you what it is and I'll tell why it becomes technical as well, right? So with a buy-to-let, what usually happens is you buy a property and you let it out on something called a assured short-term tenancy, which is known as the AST, right? That's right. So that's where you get a tenancy agreement. Usually it's for 6 months. Some people do it for 3 as well, but most of the time it's 6 months or a year. Whereas with a service accommodation or a B&B or furnished holiday let, right? That's the term I'd like to use because this is a very technical term, right? People come and they stay for very short periods of time. They come for a weekend or they come for a week if it's the summer and spend time with their friends or family. They do stay for shorter time periods, right? So that's the main difference between the two. Now, this is where it becomes technical. For a house to qualify as a furnished holiday let, the tax authorities or HMRC, they have certain guidelines, right? Obviously, I'm not going through the full detail of it, but to qualify as a furnished holiday let, your house should be available to let for a period of 210 days a year for the general public. Now, out of that 210 days, it should be let out for at least 105 days. And it cannot be let out to one person for longer than sort of 31 days, right? So you have to sort of fulfill that criteria. If not, even if you're doing this as a service holiday let, you may still fall to a buy-to-let category. So for example, if you let out to an individual for 2 months, you don't qualify, right? So you have to be very careful. That's why I said it's quite technical. So just be mindful that, you don't fall foul with those kind of conditions, right? Because otherwise all these benefits will go away.
Yeah, that's important to remember. So what happens if you don't meet the criteria then?
So if you don't meet the criteria, it will be treated as a normal buy-to-let. So you have to pay your taxes based on that. So the treatment for that is very different.
Okay, so why do people then do the holiday let mortgages rather than the buy-to-let?
Yeah, so there are a lot of advantages. Obviously, with COVID, a lot of people decided to sort of stay in UK, and staycations suddenly became very popular. So people sort of thought, okay, why not, if they had spare cash, just buy a house, let it out, and when they want, spend a week or two in the house, right? So that's one of the reasons. So you get to benefit from this as well, like take a vacation. But at the same time, you can make some money as well, right? So people like the idea. So that's one of the main reasons that people do it. But obviously there are tax benefits as well why people do it. Because if it is a furnished holiday let, your section 24, which to do with how interest is treated in a sort of a buy-to-let, will not apply. If it's a service holiday let or furnished holiday let, it will not apply, right? So there is some tax advantages where you can deduct interest in full. So because of that, it's become popular as well. And obviously there are other things as well. There are sometimes there can be capital gains advantages from a tax point of view. And there's something called rollover relief. So all those things give you sort of tax benefits as well. So that's why this area has become a little popular.
You mentioned tax deductible expenses. So let's just maybe clarify what are tax deductible expenses for everyone watching, just in case they don't know.
Okay, cool. So we have done another video on a full list of tax deductible expenses. I think we can put the link at the bottom of this video. It will appear. I suggest you look at that because all expenses that's allowable for buy-to-lets are generally allowable for this as well. So there's a massive list that we have given. So please do have a look at it. But I will touch on expenses which you can claim on top, right? So one of the biggest things that you can claim is your interest can be deducted in full. So that is a massive advantage you have. And then because this is a service accommodation, there will be an agent involved. So there'll be those additional costs that you can deduct, right? And also things like replacements. Now, so if somebody sort of breaks plates and things like that, there are expenses involved, right? Now, those are usually not there in a normal standard buy-to-let, right? Because, generally you get a house, even if it's furnished, you don't generally have that, right? So all these replacements you can claim as well, right? Because some of the tax rules are... Yeah, for the full amount, right? And some of the replacements with a buy-to-let has to be identical, meaning like for like, right? So you can't replace a 2-seater sofa with a 3-seater, right? So there are certain rules like that, but those are not really applicable for furnished holiday lets. So the rules are slightly different, right? So again, this is a big subject. If somebody has any sort of questions around it, again, feel free to post it. We'll try and answer the questions as best as we can, right?
Oh, yeah, and I know with buy-to-lets you have to kind of put a minimum of 20% deposit down. Is it the same for a furnished holiday let?
It is a little tricky because buy-to-lets usually 20 to 25% is what they look for. Yes, with furnished holiday lets, it is that number as well. But sometimes, depending on the type of property, the lender might want you to put a slightly bigger deposit, right? And also, we do something called a stress test with a buy-to-let, but the stress test is different to a furnished holiday let as well, right? So that can change the number because with the buy-to-let, they look at the rent, whereas with a service accommodation or a furnished holiday let, because there are something called a high season, a mid-season, and a low season, right? So they usually look at an average of that. So the way the average is calculated depends from bank to bank, right? So this is like a very specialist area. So if anybody needs advice, they should speak to someone because, they will be able to get some better guidance if that's the case, because it can be very property specific.
Right, yeah, okay then. So capital gains tax, how does it work with the sale of a furnished holiday let? Is it similar to a buy-to-let?
Okay, I think that's a very good question. It's a common one we have as well. So with buy-to-lets, how it works, if it is on an individual or a joint name, it's a little bit more complicated than this, but I'll just give you the basics so that you understand, right? The difference between the sales proceeds and the purchase price, right, is actually your capital gains, right? Sales proceed is your income from the sale minus estate agent fees and minus solicitor fees, right? And the purchase price is usually the price at which you bought plus stamp duty, plus, you have solicitor fees or any renovations you did to the property, you can add. There are certain conditions on that. So it's effectively the difference between the sales price and the purchase price. That's your capital gains, right? So on the capital gains, there are allowances which you can deduct. Generally, it's 12,500 per individual. So if it's a joint property, that limit doubles, right? So that is effectively how capital gains is calculated. So if you're a high taxpayer, after those deductions, you pay something like 28%. And if you're a basic taxpayer, you pay 18%. So that's how it works with capital gains. But it's a little bit more complicated, like I said, than I explained. I try to simplify it as much as possible, right? But the difference with a furnished holiday let is this is not considered as an investment. It's considered as a trading property, right? It's a trading asset. So usually people run it as a business, right? Like you have a separate business, you have a separate website, everything is separate, right? So if you go to Airbnb, you can see it, but obviously you'll have your own website. It's advertised as a business, right? So if you are doing that, the normal capital gains rules may not apply to you, right? So you might be able to, if you're selling it, you might be able to get something called entrepreneur's relief, right? Now, entrepreneur's relief, you pay only 10% tax, right? So works in a slightly different way. But again, consult somebody on this subject because it is a very broad area, right? Because you have to fulfill certain conditions before you can qualify for this, right? But a lot of business, if you sell it as a going concern, right? So if you sell it as a business rather than selling the property and taking off all the assets, you should qualify for this. But get some advice on this area because it's a very broad area, right?
So if you're going to sell it as a business, would you still put the property up for sale on Rightmove and all that, or is there a different way?
Yeah, but you got to sell. Yeah, usually these kind of is specialist areas because there are specialist agents who handle this, right? So there are specialist websites which will sell holiday lets. If you sort of Google it, you'll find it, right? So usually that's how it's sold, but generally for you to benefit from the tax, you probably want to push it in that area. Because if you go to Rightmove, they'll generally sell it as a house. But if you want the tax benefit, you need to do it in the right way.
Thank you, Ifthi. I feel like this is what makes you so good because you are also an accountant and a mortgage advisor. So we've got that knowledge all rolled into one. So thank you. I think that's going to be really useful for our viewers. Just one thing before you go, though. I just wanted to kind of clarify this rollover relief because I know we mentioned it before. Can you just tell me a little bit more about that?
So that's another benefit. Some people say with rollover relief, you don't pay any tax at all, right? It's true to a certain extent, but obviously to qualify for that, you have to be very careful, right? So if you're selling this as a business and you're buying a business asset from that money, you may not have to pay the tax, right? So
if you were selling one holiday furnished property to buy another furnished holiday let, then that might count as a rollover relief.
Yeah, that's right. So it might count as a rollover relief. So people do that, right? So for example, let's say they have a property, nothing to do with Scotland, but let's say they have a property in Scotland. And if they think it's more profitable to now move to Cornwall and decide to do that, so they can sell it as a business, right? And they are buying another business, right? So if they're buying another business, they should be able to qualify for this rollover relief. Again, it's very, very technical. You probably want to get advice before you do all this, right? But speak to an advisor on this area. It doesn't necessarily, so this is the bit I need to qualify, it doesn't necessarily have to be a furnished holiday let. It could be a business asset, right? So when I say business asset, you could be buying another business, right? Or you could be buying shares in a company. So there are certain other things that will fall into this category as well. So that's why I said, if you're trying to do that, speak to an advisor because this can be a little technical.
Okay, yeah, that sounds really interesting. Thanks, Ifthi. Yeah, I just wanted to make it clear to everybody that these points may or may not be applicable to everybody. So I really would recommend getting in touch with an advisor to see if they're suitable for you. Obviously, I will leave our WS contact details below as we're always more than happy to help with your inquiries. And I'll also leave the Movember link down below, so if you wish to donate, you can do so as well. Just wanted to give you a gentle reminder that as the property is secured against your home, it may be repossessed if you do not keep up with the mortgage repayments. Thank you for joining us again today. Have a great week, stay safe, and we'll see you again soon.